welcome. You're tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma, and with me as always is Shell D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts. But before that, let's track the market action. And Shell, what a surprising move on both the benchmark indices. It's a record high level coming in for Nifty 50 as well as Sensex yet again.
Yes, absolutely. A very good morning to you, Shrishti. It's turning out to be a better morning, at least when you talk about the benchmark indices. On the surface, we've hit a fresh record high level. When you talk about the benchmark indices, remember today is an all-important day. You will have the FOMC meet outcome that will take place later today. And now the debate is about whether they're going to cut rates by 25 basis points or 50 basis points. So all eyes on the quantum of the rate cut that the FOMC will undertake. So on back of that, you have the markets that are actually trading pretty range bound over the last few trading sessions as well. If you take a look at Nifty Bank at this point in time, because Nifty Bank also is moving in tandem with benchmark. It's actually outperforming the benchmark indices. 0.8% uptick coming in for our Nifty Bank. Let's take a look at what the broader markets are doing and are they participating in this sort of an up move coming in for the Nifty Bank. There you go. The broader market still weak with the mid cap index at the day's lowest point and the small cap index around the flat line. Talking about the advanced decline ratio, a tad bit tilted in the favor of the declines as we speak. While talking about the gainers, you have Bajaj Finance, Shriram Finance, Hero MotoCorp among the top 3 gainers on the Nifty, while on the losing end of the market is all actually the top six losers on the Nifty are all from the IT pack. So it's Tech Mahindra, Infosys, TCS, LTIM as well as Wipro and HCL Tech. All of them are losing in trade at this point in time, Shrishti. So yes, while the benchmark indices are seeing good moves, you have the IT index that's down about 3%. You also have pharma index that's taking a bit easy, 0.6%. And along with that, if you look at the gaining end of the market, you have the auto sector holding on to good gains of about 0.5%.
Well, certainly, but all eyes on the big event that is lined up. And before that, though, there is the excitement going on in the equity markets. But let's also have a look at some of the commodity-related plays as well, because it's the crude prices that have been plunging for some time now. But how it is going to play for the metal space overall, and how are they going to react for the upcoming Fed outcome? Let's hear out Nikun's take on this.
Not be surprised that if metal, they turn out to be a surprise mover, and we are just being very contra here, but the data and the historical patterns are that when US economy gets into some kind of a slowdown, and when the dollar index goes down and there is flow of liquidity, historically it moves into commodities. You can put the China element and say, okay, this happened when China was also consuming. Okay, the impact could be less, but the impact I think would be there. Equity, the gap, the intrinsic value gap between commodities and equities right now is disproportionately high. So money has to move into commodities. Gold has started moving up, crude has started falling. I will not be surprised that if metals come back, then you could see a comeback in some of the metal stocks in India as well. So I think it should happen. I'm purely connecting dots here. I could go wrong also, but I'm purely speaking what I've learned over the years.
All right, so that's about the metal space. In fact, we dwelled in further to understand exactly what is happening in the metal counters and how is the space looking like, because remember, you have the commodity markets actually seeing swings on either of the side. A lot of them did see a sharp downtick in the month of September. From there on, we've seen a bounce in the commodity prices as well globally. We had Nikunj as well as Kunal actually decode the entire metal index and what should one expect from it going ahead. Let's hear that out as well.
What are we looking at? We are essentially talking about the dollar index going down, crude stabilizing and popping right back up, and commodities historically have done well when there is liquidity, when Fed is cutting rates, and when one is getting a sense that the US economy is slowing down, and excess liquidity always fuels commodity. But this time, this combination of a weak dollar index and a Fed cut setup has not really translated into a big rally so far. Kunal has been maintaining his view that get ready for a multi-month rally in commodities, and now your view is that the commodity index, so Nifty Metal Index, is at a new high.
No, it's indicative of a big breakout. So,
Okay.
something which...
How far it is away from a high?
So, I think just about 2 percentage points from a breakout point, but from a high, I think it's still 10-15% away.
Okay, so we are now at that launch point, so to speak, where the
Exactly.
markets or the Nifty Metal Index could pivot.
Exactly.
Why do you say that?
So, what we mapped out is a trend indicator. Now, a trend indicator is a classic sign of, indices or stocks coming out of their bearish phases and then into a breakout mode. So, this is the chart. So, the upper end is the indicator which I mapped up. And very interestingly, over a span of every 6 months from November 2022, we saw the indicator breaking the line of zero. The Nifty Metal Index got into a breakout. We saw 15% rally, 10 to 15% rally in a matter of just 2 months. Then, same happened in March 2023. We saw the index breaking out of that, zero barrier. That resulted into the Nifty Metal Index moving up from 5,700 to almost 6,300 levels. Same happened in November 2023, April 2024. So we are at that point again in the month of September, October 2024, that the Nifty Metal Index is showing a classical sign of a breakout of this zero line. If that happens, the last 4 instances, and all interestingly, every 6-month phase, so November 22, April 23, November 23, April 24. Every 6 months, the Nifty Metal Index has managed to give a breakout, and that's led to almost a 2 to 3 months of a 15% rally.
So you are of the view that a sharp rally in metals, because for metal it would be sharp.
Absolutely.
A sharp rally in metals is coming.
Absolutely. So for the index, if it's 15%, then you can expect that many of the constituents can rally by 20-25% also.
What is the composition of the Nifty Metal Index? Like, for example, in the Bank Nifty, 3 banks account for nearly 70% of the weightage.
Correct.
What is the composition here?
So Tata Steel, of course, is one of the highest weighted stock over here. Then you have the likes of JSW Steel, JSPL, Hindalco, Vedanta, etc. Many of these stocks, they have a substantial holding for themselves. But from the charts, when we look at the leaders, then so far on basis of price performance, JSPL and JSW Steel are the 2 ones which are coming back towards a breakout of their all-time highs.
So JSPL and
Jindal Steel.
no, JSPL
JSPL and JSW Steel.
JSW Steel. They both are looking set for a clean breakout.
Absolutely.
All right, then on that note, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll talk more about the metal space and also start taking all of your stock-related query. Viewers, don't go anywhere.
डूबेगा नहीं.
Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can write to us on the number that's flashing on your screen. Do remember, each time you write to us, mention your name, the stock that you're looking to invest in, mention that name as well. And if you've already invested in the stock, please mention your buy price, the quantity, as well as the time horizon. In that way, our experts will be able to guide you better. Talking about our experts, today is going to be the Techie Special Show. So we have Kunal Bothra joining us on the technicals, and along with Kunal, we also have Ruchit Jain who's joining us on the show on the technicals. A very good morning to both of you. Thank you so much for being part of the show. And let me kickstart taking all of the stock-related queries. The first one that I have is coming in from Pallav Gupta, who wants to know whether it makes sense to continue to hold on to Asian Paints or look to exit. Our viewer has purchased this one, Kunal, in the year 2021 at a price of around 2,330 rupees per share. Wants to know whether it should hold on to this one right now or look to exit. And if you say hold, then he can hold on for the next 1 year is what he's saying.
So I think there are two indications over here. One, of course, is the dependability of the stock or the correlation with respect to crude oil prices. Whenever crude oil prices rise, we typically see Asian Paints or the paint stocks getting into a corrective phase. Now we are in that phase where on the short term wise, there could be a possibility that crude oil prices may continue to rise up higher, based on the fact that we've discussed earlier that the metal index is going through a breakout. So commodities across the globe could get into a rally. So that could probably dampen the mood for stocks like Asian Paints over the very near term. But then when I look at the charts over the longer term basis over the last 3 to 4 years, the stock is confirming a potential consolidation breakout. So there could be short-term pain which could be seen into the stock price. By that I would probably mean maybe another 200 odd point corrective phase could probably creep into the stock price. If you're not deterred with that, then I think continue to hold on. But if you are wanting to book profits over here and then maybe wanting to time back again when the stock completes its corrective phase and re-enter, then I think at current levels you can continue to book profits.
All right, moving on to the next query. And Ruchit, hi, very good morning. And the first query that we have for you is coming from Deepika from Bombay. And she has specified that she's an investor and not a trader and wants to know a strategy in two of the stocks she's holding: 100 shares of BHEL from a price of 60 rupees. And she also has CESE, 100 shares from a price of 154 rupees. What's your take on both of these for the long term, Ruchit?
Yeah, hi, very good morning to all of you. Well, if I look at the long-term charts of BHEL, then the trend still remains quite positive on the longer-term chart. Although recently we have seen some correction from the highs of around 330, 340 kind of range. But no, these are just seems to be a retracement move of the previous uptrend which it had seen. So the stock has a good support now around 250 to 40 kind of range. And looking at the buy price, of course, the margin of safety is there. To go through this, to have some patience and hold in this corrective phases, so that in the next leg of uptrend, the returns could increase. So I would recommend to hold on to BHEL. The downside, price-wise downside seems to be limited from here. There could be some time-wise correction, but that will not change the longer-term uptrend. And CESC also, I think one should have a similar strategy to hold on to current levels. But here I would suggest keeping a stop loss below 160 kind of levels. Whenever corrections have been there in this stock, the 100 DMA has not been breached in this uptrend. So which remains a pivotal point, crucial point for CESC. So as of now, continue to hold on first to CESCL, but from a longer term perspective, view will change if 160 gets breached. So it is advisable to keep a strict stop loss below 160 on CESC.
All right, this one is coming from Atul and he is writing to us from Hyderabad. Kunal, he has 100 shares of Sona BLW at a price of 550 rupees per share. He wants to know whether he will be able to see any upside in the short term in this counter, as well as Wipro, 300 shares at a price of 290 rupees per share. He wants to know what's the upside in the short term for Wipro as well. Wipro today is actually down with the rest of the IT pack, but if you look at the buy price for both of these counters, are pretty attractive. For a viewer, he's sitting on a healthy set of profits also.
Yeah, I think you'll see and you'll experience also good profits into both of these names. My sense is that both of these stocks are poised very well, in terms of their potential breakout. Sona Comstar, Sona BLW, that's a chart which is looking attractive. The stock has been just trading at the 720, 30 plus mark over the very recent time frame. But when you look at this over the medium term charts, the stock is heading towards a breakout, the previous highs of 840 approximately. I think those levels should be taken out in this leg of rally for the stock. It may take some time, but I think if you're a patient investor, I would probably believe that you could stay put. Wipro is also completing a major phase of underperformance. So that stock, I think post results last quarter, if I'm not wrong, went through a very sharp correction. The stock is going through a bit of a consolidation over here at this 550 range plus minus 10-15 points. But I believe that eventually the stock should cover up the underperformance because the Nifty IT index is poised very well on the longer term chart. So eventually all of these underperformers, large cap names should make a comeback. I would suggest to stay put in both of these names.
That's the advice coming in on this. But another stock is Maruti Suzuki, where Kuldeep Marwa wants a view. And Ruchit, if you can help him with your view on this counter. He's holding 32 shares. His buy price is 12,500 rupees. Would you advise to hold, average, or completely exit at this point?
So I'd recommend to continue holding the existing positions, not to do any fresh averaging over here. But overall, if you've seen Maruti, then in the month of April, it was trading around 12,000, 12,500 range, and still it is trading around the same range itself. On a longer term chart, this seems to be more of a time-wise correction within a trend, because the important 40 DMA support is also not breached on the weekly charts, which is around 11,500 kind of range. So till that is intact, the medium term, mid to long term trend remains intact, but this is going through some time-wise corrective phase. So until we get any signs of resumption of the uptrend, it's not advisable to buy more of these shares. But yes, existing positions, if there are, then these are not the levels where one should think to exit the position. So continue to hold on the same positions which you have.
All right, this next one is coming in from Shashi, who's writing to us from Bangalore. Shashi wants to know about Amara Raja batteries, Kunal. 80 shares at a price of 1,487 rupees per share. What's your take coming in on this one? Because you saw Amara Raja have a good run on back of various news flow announcements which were positive for the company. From there on now, it's given up some of its gains over the last 1 to 2 months.
Well, yeah, so when we look at this on the quarterly charts, the stock has done exceptionally well. So in the last quarter or so, the stock moved from 757 or 780 approximately towards 1775 odd mark, which means the stock went through double in the last 3 months or so, after such a kind of a steep performance, the volumes being exceptionally high, it's bound to be that the stock may remain subdued for the next 1 or 2 quarters. So I wouldn't be surprised that, say, for the next 2-3 months also, the stock goes into some bit of price consolidation as well as a time consolidation. But such kind of quarterly breakouts, they start off or they indicate that the stock is restarting a major multi-year uptrend. So I think it's a matter of time frame which you're looking out for. If you're looking at the next 2-3 months, then you may be disappointed. Potentially the stock may continue to consolidate, but if you're looking at this over the next 3 years plus kind of a time horizon, then I would be of the opinion that the stock could provide a very strong upside even from the current levels where it's trading as well as compared to the previous highs of 1700 plus.
All right, I'm coming back to you, Kunal, because Akash Mathur wants a take on KPIT. He's already holding the share from a price of 596 rupees. It's already a multi-bagger for him, but if you can share your view for the next 6 months to 1 year, how is the stock expected to perform at this point? Is that a hold or exit?
See, if you're a long-term investor, then you should continue to hold on to these stocks because of the fact that I mentioned that the Nifty IT index is starting off a major cycle of an uptrend. So I think on that context, there could be a possibility that these stocks, mid-cap IT names also could move up higher. But if you're specifically asking for the next 6 months, then what the stock is doing for the last 2 months prior is it's defining a range for itself. So current range I think is closer to 1700 as a support and 1850 approximately as a resistance for the stock. So it's trying to define a 10% range. Maybe the stock could continue to trade in this range for the next at least 3 to 4 months before it heads back into a breakout. But I believe that eventually many of these stocks, and since you are sitting on a very good buffer, you should ideally stay put. So it depends on your time frame. For the next 6 months, expecting the stock to consolidate, but from a long-term play, very positive and would suggest to buy as well as hold.
All right, let's take this next query then, and this one is coming from Satya, who's writing to us from Trichur, wants to know about major support levels for Star Health. He has already purchased this counter for a time horizon about 1 to 2 years, Ruchit. But the problem is he's incurring about 10% loss in this one. What's your take on this one? What are the support levels and what sort of a target should he keep in mind? Should he stay put with this one?
For now, you can continue to hold because in the recent up move post June, we have seen the stock has formed a higher bottom around 565 kind of level. So that remains a very crucial support till that is not breached. The structure remains of a higher top, higher bottom. So I think these are just short-term corrections which are going on. So 565 is the main support for the stock. If that is intact, then I think in this correction, the stock would manage to find somewhere support somewhere around 585, 590 kind of range, which is the 100-day exponential moving average. So keep a stop loss below 565 and can continue to hold this from a mid to long-term perspective.
The next query is coming from Yuvraj from Chennai, and he's holding 100 shares of Rainbow Children Hospitals, and as of now sitting at a 10% loss in this one. He can hold for the long term, but Ruchit wants a view that would you advise to rather make a shift in Jindal Steel and Power at this price point, or would you advise to continue stay put with Rainbow Children?
Not in Jindal Steel and Power, but I think within the same sector, if you want, then you can shift to other stocks such as either Apollo Hospitals or Narayan Vidyalayar, where the mid to long-term chart shifts are much positive, and in the up move, we have seen a good relative outperformance supported by good volumes. So I think can make a shift from Rainbow Children's Hospital to either Apollo Hospitals or Narayan Vidyalayar.
This one is coming from Vinita Rai, who's writing to us, Kunal, on L&T Tech, 36 shares at a price of 3,909 rupees per share. She wants to know if there is any scope for considerable upside from these levels now, or should she look to go ahead and sell and invest in other counters? She's making good profit in excess of about almost 2,000 rupees per share profit for this one. What should she do?
So interestingly, the stock on the long-term charts, and when I talk of this over the last 4-5 years, 2020 approximately, went through a process of redefining a high or a resistance point for itself. So 2020-21, the stock made a high which was closer to 5650 mark. In 2023 and 24 start, the stock made a high which was again closer to 5678 approximately, and the recent high for the stock was at 6000 levels. But on closing basis, we are still at that 5700 odd mark for L&T Tech, which means that over the last 3-4 years, the stock is trying to get back into a breakout mode of this 5600 mark. Now there could be a possibility that this time around the stock may take a dip first and then get back its momentum as well as try to break past about the 5700 levels. But if you're a long-term investor, then I think you should wait for that potential breakout, because when we talk of stocks heading to a consistent retest of a major resistance. Eventually, when these resistance cave in, the stock restarts a major cycle of uptrend. So I think in that process, I would suggest to hold on to the stock if you're a long-term investor.
All right, that's a hold coming in on L&T Tech. But with this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll come right back and take more of your stock-related queries. Welcome back to Buy Now, Sell Now on ET Now, and let's keep it going with all your stock-related queries. But before that, let me welcome Nilesh Jain, who is the Head Derivative of Technical Research at Centrum Broking, joining us on the show to guide you better. And Kunal Bothra is already there with us. And let's keep it going then with the next query that I have is coming in from Venkat Rao. And Nilesh, let me take it from you. Venkat Rao is a long-term investor and wants to know, can he buy United Spirits or HDFC Life at this price point, or would you suggest to buy any of these counters on dips? What will be your advice, Nilesh? Good morning.
Very good morning to you. The structure for United Spirit looks very strong, and we have seen a constant formation of a high top and high bottom formation, and consumption is already showing some strength in last few months now. So overall, United Spirit position target comes somewhere around 1800 to 2000. If somebody has a time horizon of more than 1 year, then probably one can look for 1800 to 2000 kind of target. And if for fresh investor, it's a buy on decline kind of structure. And if somebody is already holding the long position, can keep a trading stop loss below 1450. So that should be the stop loss for the long position, and one should ideally ride this momentum. Apart from that, the other stock, I guess, was HDFC Life, you have asked. So HDFC Life also has a positive structure, and we can expect a kind of a pullback in this particular stock. And if somebody is looking from a position point of view, then probably 800 plus kind of target can be seen in HDFC Life. One can keep a stop loss below 655. So that's the crucial and important support for this particular stock. And yes, can be added at current level as well.
All right, I have this next query coming in from Nikhil Sharma, and every time Nikhil writes a query to us, I always find myself puzzled because it's a very convoluted query, and he tries to actually add some 2 to 3 queries in that one message of his, Kunal. So this one I'll take to you. Hopefully you will be able to decipher it today and guide him better. He has 23 shares of GAIL, which he's purchased at the levels of 240.94 rupees per share. He's saying it is right now below its stop loss. When should I go ahead to book profits or hold on to this for the long term? And apart from this, he wants to know when would be the right time to go ahead and exit from L&T as well as ITC. He's not mentioned the buy price for L&T and ITC at all. So what's your take?
So I'll start off with L&T and ITC. I think, at current levels, I would believe L&T is heading back into a resistance zone. My expectation is that my assumption is that you are already sitting on profits on both of these names. So I think at levels of 3750 thereabouts, where L&T is trading right now, it's a good time where you should look to book out your short-term trading profits and get back again when the stock gets into a mild reversal. So in case if it dips down to say 3700 mark or slightly below those levels, if you're a short-term trader, then look to buy back again. Same would be the case with ITC. The stock is defining a resistance zone. 515, 16 or 515 to 20 band has been a major resistance band for ITC. So I think closer to that resistance point is where you may consider booking out profits for ITC. GAIL, on the other hand, since you're sitting on losses, the stock has also gone through a correction in the last 1 week or so, corrected from I think levels of 240 approximately to levels of 219, 220 where it's trading right now. There could be a potential bounce back into the stock. So my sense is that it could probably try to challenge back its 50-day moving average, which is placed at 225, 226 for GAIL at current level. So if you're looking to exit on maybe some bit of bounce, then I think 226 thereabouts could be a decent rally where you could look to exit.
All right, moving on to the next query, and Nilesh, the next query is coming from Gautam from Mumbai, and he wants to know, is this a good time to buy Varun Beverages or Indian Hotels at this price point, maybe for the next 12 months?
Well, Srishti, the structure for VBL, this particular stock looks positive. The stock is trading well above its key moving averages, and it is also on the verge of a major breakout. That breakout zone is somewhere around 660 to 680. So yes, at current level, it can be bought keeping a price target of close to 850 to 900. It's a positional buy from 6 to 8 months point of view, and one can keep a stop loss below 610 for the long position. So VBL, yes, it can be bought at current level and on decline. And which was the other stock that you mentioned?
The other stock was Indian Hotels, Nilesh.
Right. So Indian Hotel is also in a bull trend, and constantly we have witnessed a good up move in this particular stock, and it is trading at all-time high level as well. So at current level, I wouldn't advise going long since the risk and reward is not favorable. It's better to buy in a staggered manner. And if somebody is looking for a fresh entry, then I would advise to buy somewhere around 660 to 670. That can be a good entry point. Keep a stop loss below 640, and upside target for this particular stock comes somewhere around 720 to 750.
All right, let me take this next query to you, Kunal. Also, a very good morning to you, Nilesh. I will come to you for a query shortly, but Kunal, let me take this one for you because it specifically come for you. This was from Smita Vikram, and also I have a similar query from Nishi. So let me take the similar query then. Smita has BSE at a price of 2,496 rupees per share is what she's written. I'm not sure if that's the accurate price. She wants to know whether she should go ahead and book profits, while Nishi's price is 194 rupees per share. So I'm not sure which one is the right price here. So what should their strategy be? I think for Nishi, maybe she's missing a zero or a digit there, right?
No, it could be possible.
It could be, right?
Yeah, because I think 2020 or thereabouts, I think if I'm not wrong, the stock was sub 200 rupees, the price of BSE. Yes,
actually, it feels a long time ago, isn't it? Actually, given the fact that the rise, but we cannot forget the rise in Nifty also over the last 4 years.
Exactly, absolutely. So I think in that sense, the stock has mirrored or of course significantly outperformed what's happened to the overall market, because we've seen the influx of investors which have come back into the last 3-4 years of this post-COVID kind of rally. But nevertheless, I think for BSE, I think on what I sense on the chart is, if a stock can absorb a 30%, 40% correction, which happened I think on BSE in just the last 3-4 months, month of April or March, the stock made a high which was closer to 3,200 levels, fell back towards 2,100 mark, which is almost a 1,000-point correction, so 30% correction for the stock in the last 3 months, and then come back again to make a fresh high, which is almost 20% higher than the previous swing highs of 3,000, 3,100 for BSE. So that's a substantial jump. And that's an indication that the stock is into a very strong uptrend. Now, all you have to do is that since you've bought at such lower levels for both of the viewers, I think you should just about try to stay put into this stock for the next many years to come by, and wait out for that phase of correction. So in case if the stock corrects by 20%, 30%, I think that could be a substantial zone where you could look to even average out and buy further.
Alright, so that's on BSE. Both of our viewers actually are sitting on very healthy profit, especially Nishi. Her buy price is pretty attractive. I couldn't believe that buy price. But Kunal, the other query that Smita had was on NTPC. 370 is a buy price.
So again, a stock which is showing a lot of potential over the last few months. We've seen that very selective PSU large cap names, they have managed to show signs of consistency and outperformance. NTPC of course is one of them. I would suggest to stay put into the stock. My sense is that the stock should be able to break past over the previous resistances of 420, 430 approximately. So even if you're a short-term kind of an investor with a say 3-month kind of a time horizon or more than that, then I would probably believe that the stock should be able to surpass levels of 420, 430. 440 to 450 could be a target range for NTPC if you're looking at it with that kind of a time horizon.
All right, so that's the take coming in on both of these names. But the next query, Kunal, that I have is coming in from Gaurav, and he also wants a view on some of the stocks that have also shown phenomenal returns, but wants to know that on dips, will that be a good idea to buy HAL, BEL or BDL at some dips right now? If given an opportunity, what will be your advice?
So I believe so. It's a phase of sector rotation which goes on. So for 2022-23, good 2 years approximately, you saw the defense stocks, the PSU names outperforming significantly. Right now we are into a phase where the private sector stocks, private sector banks, and many of the other spaces which have started to show signs of outperformance. So it's a sector rotation play which is which is going on for the PSU stocks and the defense pack specifically. Once this sector rotation ends, you should probably expect that the defense stocks should make a comeback for themselves. I think these stocks are very close towards their 200-day moving average retest as well. So it depends on your time frame, it depends on your patience, as well as your expected kind of an upside which you're looking at it on a longer term play. Just like what I mentioned for BSE, for example, the stock went into a 30% correction over the last 3-4 months fell below its 200 moving average before making a very strong comeback and making a new high for itself. I expect the same for many of the defense stocks. So over the next 2-3 months, if you get these stocks on a cheaper territory from current levels by 10% margin, that should be a substantial zone where you should keep on accumulating.
All right, this next one is coming in from Rebecca, writing to us from Kolkata, and coming to you, Nilesh. She has 10 shares of Fine Organics at a price of 5,851. Also, Alkyl Amine, she has 10 shares at a price of 3,329. Should she wait with these counters for the next 6 months? She's been holding on to them for the last 2 years. What strategy should she adopt for both of these counters, given the fact she's patiently hoping to make some profits now?
Right. So in fact, structure of both the stock looks very strong on the chart. Specifically, Alkyl Mine, if you look at this particular stock, today we have seen a big spurt in this particular counter with a good volume participation as well. This particular stock is kind of forming a big rounding bottom, and on the weekly time frame, if you see, it has also given a breakout from a big falling trend line. So it's kind of a multi-year falling trend line breakout can be seen on the chart. So from a position point of view, I think the stock has a potential to test 3,000 kind of level in next 1 year time frame. So yes, at current level, I would advise to stay put, keep a trailing stop loss somewhere around 2150, and yes, better to hold on to this particular stock. Apart from that, Fine Organic, this particular stock is also trading somewhere around 5,500. And it looks like it has formed a good base formation in the zone of 5,000 to 4,000. Now it is likely to move towards 6,000 plus kind of levels, but the breakout is awaited. I would rather wait for a breakout confirmation, which will come above 5,700. And post breakout, I think the stock might test the levels of 6,000 to 6,500. So keep a trailing stop loss somewhere around 5,150 and ride this momentum.
All right, that's the take coming in on Fine Organics. We're moving on, and the next trade that I have, Kunal, is coming from Palin. He's holding Ajanta Pharma at a price of 1,010 rupees. He is indeed sitting at great profits in this one. But Kunal, what will be your advice with Ajanta Pharma, or rather, can he go ahead and make a switch in any of the metal stocks?
Yeah, I think that could be a good strategy where you may look to at least go for a partial switch, if not the entire quantity. Because the stock is going through a mild correction, there could be a possibility that the stock may come back towards the previous highs of 3,300, 3,450 thereabouts. So that could be a better level where you may look to an entire switch. I think at current levels you can consider booking out partial profits over here and switch back to metal counters as we were discussing earlier, that there could be a potential 10 to 15% upside cycle which could be restarting for the metal index. The breakout which you have to wait out for is 9,500 mark on the Nifty Metal Index.
All right, so that's the take coming in on the query. But on that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, more queries to be answered. Don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking all of your stock related queries then. And the next one is coming in from viewer Anish, who's writing to us from Trivandrum, and Kunal, he wants to know what's the right level to go ahead and buy Tata Steel.
Yeah, I think price-wise, maybe current levels of 150 approximately, the stock could have bottomed out. The only confirmation which at least I would be waiting out for is when the stock breaks past on the back of higher volumes of its previous resistances. So the volumes have moved up hard on a few odd days for the stock. But then that has not been able to let the stock break past above the previous highs. That's the only missing factor for Tata Steel. And generally, when a sector gets into a breakout mode, eventually these stocks they get back into a sudden breakout move for themselves. So you can either wait for that breakout to happen. Maybe that level could be closer to 160, 158 for Tata Steel. But if not, then I think current levels of 150 approximately could be a good risk reward territory to buy the stock.
All right, Nilesh, the next query that I have is coming in from Lakshmanan, holding shares of Hutco. His average buy price is 297 rupees, and for some time now we are seeing the stock to be in the downtrend. What's your view on this one, Nilesh? Good to hold on for the long term, or can he book some loss at this point and take and keep holding some of rest of the counters after booking partial loss in this one?
So, Srishti, as you have rightly pointed out, this stock is in a downtrend and still looks weak on immediate basis. The 200-day moving average that is coming somewhere at 216. So there are high possibility that stock may slip below 230 or maybe 220 kind of levels on the lower side. So ideally, in this kind of a weak structure, we advise to sell on rise. If at all you see any pullback towards 260, 270, use that pullback to exit from a if your time horizon is from a short term point of view. Unless if somebody wants to take a view from more than 1 year kind of time frame, then probably one can stay put, keeping a strict stop loss below 220 and hold on to this particular stock. But the stop loss is coming slightly deeper. So take your call. I think the immediate trend looks slightly on a weaker side.
All right, this next one is coming in from Nirmala Vishwanathan, wants to know about MRF actually. She's a long-term investor and she wants to know whether she can buy MRF at this levels. What's your take, Kunal? If somebody wants to deploy fresh capital in MRF, what the strategy should be given the fact that this one is in a 6-digit stock right now?
Yeah. But I have always believed that what matters is not the price of the stock, but the upside potential the stock can probably see. So MRF was a stock which is 1 lakh just about end of the previous year, went towards 1.5 lakh in start of 2024. So that's a 50% jump in a very short span of time. So that's eventually what matters. I would believe that it's at a good level where you can look to buy if you're a long-term investor. The stock has come back into a consolidative phase over the last 2-3 months. So I think at current levels of 134 approximately, the stock could be a good buy.
All right, the next query that I have, Kunal, is from Shri, and this one is specifically for you. Wants to know, is this a good time to buy LTI Mindtree for the short term? If not, then any other two counters from the IT space you would like to recommend for the short term?
Yeah, not for the short term, because as I mentioned that potentially these stocks over the next 1 week or so may go into a minor mean reversion phase. So what you can do is maybe keep a level, say 5,800 to 6,000 levels could be a good zone for L&T Infotech Mindtree. So that's a chart which is looking attractive, but maybe a 5% dip from current levels could be a very good risk reward territory where you can look to enter the stock.
Alright, this one's coming from Krishna Kumar, wants to know about Titagar Wagon, Nilesh, 850 shares at a price of 1,645 rupees per share. Should look to average right now or wait for further correction, or should he look to sell this one and put the money in some other stock?
Well, as of now, the trend looks weak. In fact, if you look at the entire railway space, the trend has turned slightly on a negative side. As far as this particular stock is concerned, on the lower side, there are high possibility of stock testing 1,200 kind of levels on the lower side. So better to exit on pullback towards 1,350 or 1,400. That can be a good exit level. The trend looks weak, and on immediate basis, we might see the levels of 1,250 to 1,200. So better take an exit if at all you see any pullback towards 1,350 to 1,400.
All right, moving on to the next query, and Kunal, this one is coming from Achar from Tamil Nadu and wants to know, is this a good time to enter into any of the jewelry counters? And he's specifically looking out for Kalyan Jewelers. So what's your advice coming in on this particular basket of counters, Kunal?
Yeah, these stocks have run up exceptionally high. Even the the high beta stock like PC Jeweler, that stock has also moved up by 50% in the last 1 month or so. So now buying these stocks at current levels, and that to an entire quantity which you are looking to deploy, would be a bit of a steep ask. It's always best to wait out for these stocks to get back into a corrective phase. Whether it happens or not, of course, is a big question. But when it happens, I think that's the better time where you could look to deploy the capital over here. Currently, if you're looking to trade or maybe look at a medium-term kind of a time frame, then I think banking counters is what you should be focusing on.
Alright, this one is coming from Suguna, who's writing to us from Dubai, wants to know about IDFC First Bank, purchase at the levels of around 60 rupees per share, about 500 shares. Nilesh, she's sitting with it or she's holding on to this for the last 1 year. Should she look to exit this one or stay put with it? If you are advising an exit, then does it make sense to park their money in a PNB or, for the matter of fact, Federal Bank?
The outlook on overall banking space is on a positive side, and this stock has already underperformed the most. Now it looks slightly oversold, and if somebody is already holding the long position, that too at 60 level, then I would definitely advise to stay put. keep a trailing stop loss somewhere around 70 because the stock has been trading in a falling channel and the lower end of the channel comes somewhere around 70 rupees. So 70 should be the stop loss for the long position, and we can expect some kind of a base formation and turnaround in this particular stock going forward. So keep a time horizon of 6 to 8 months. I think the stock has a potential to move towards 80 or 85 kind of levels. So stay put as of now, keep a trailing stop loss somewhere around 70 rupees.
All right, so that's the take coming in on IDFC First Bank. But with this, viewers, we are completely timed out in this edition of Buy Now, Sell Now. Thank you so much, Kunal, Nilesh and Ruchit earlier for joining us today and helping all our viewers resolve their stock-related queries. But with this, viewers, it's a goodbye from me and Cheryl and the entire team who put the show together. Thanks so much for watching, but don't go anywhere. Markets at noon will take the action ahead.
If you like this video, then like, share and subscribe to ET Now.